Hello guys, welcome to a Trading Parrot. Do you see this smile? Do you see how I'm looking today? I'm gonna ask you a question. What do you see in common between the Megaphone pattern that lasted for 8 months before breaking out and the fractal between 2024 against 2020? I'm gonna give you the short answer. The biggest challenge was not technical, but actually everybody constantly telling you that you're obsessed, that you're wrong, that we shouldn't be looking into this. People saying, I'm gonna leave the channel, I'm tired of listening of this. And the outcome, we started talking about the Megaphone pattern pretty much since March, because that is what we do at this time in the cycle. We didn't even have anything that looked like a Megaphone pattern in the first videos that we talk about it. And we have to spend 8 stupid months until it played out. Many people stayed, many people left the channel by that time. And fast forward, in 2024, December, we started talking about what we should be doing at this time in the cycle. And that has to do with this suspiciously close pattern against 2020, pretty much a fractal that in yesterday's videos in CoinViewer Trading, we call it for 72 hours. 72 hours is for the FOMC meeting, but we were very precise. 16th of December, if we match that timing, we should be seeing a new higher high from the fractal. And the video went live when Bitcoin was at around 102K. I went to sleep, I woke up, and we already reached 106.7. I want to talk about this a little bit more, probably only to the people that are left after having bear with me for almost 3 months talking now about this fractal. And even some people in my Telegram channel were saying, Parrot, please stop being obsessed with 2020 pattern. You're doing really good analysis without this shit. And I think the answer is very simple. Obsession with the Megaphone pattern 8 months made me money, hopefully made us money. Obsession with the 2020 fractal did it again. And there was something about this that caught my attention. Guys, if you like this type of content, make sure that you are subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. I can clearly tell that retail has become a little bit more quiet in the middle of December, which is rhyming as well with the middle of December in 2020, where we had a drop from 30 to 21. That is above 30% of people that left in 2020. In here from 65 to 38 is slightly more, I could say, maybe around the same. And I think one of the best alphas that I'm currently following is initially to observe all the data, observe all the patterns. There's always so many different things that are calling my attention, and I like to discuss them all in the videos. And that's why for many people, when they watch a random video for the first time, it feels overwhelming, it feels like there is no focus, and it's because we are browsing different ideas, and that's always going to be the case. There will always be distractions and things that we should be focusing more. But I think what makes the difference is that in this channel we go together in that journey of narrowing down hypotheses. During the past 3 months, there were many hypotheses that were calling my attention. Wells are doing this, these other people are doing that, the ETFs are moving, BlackRock is selling, blah 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 blah. And at the end of the day, the things that became more annoying because they started sounding repetitive were the things that were sticking around, and now we know it was for a reason. For me, once we rearranged the pattern and we did all this cheating of moving these 2 points from initially being like that, moving them to here, nailed it. I'm really happy that this day, on the 10th of December, I admit to be wrong where we put those points, replaced them, and gave them another go. If I didn't do that, by this time, looking at this, I would have felt like, wow, why I didn't spend more time looking at this? I missed the train because of not paying enough attention to what the price was telling us. And what the price was telling us is that the pattern was still alive. This high is that high, this support is the third support with 2020, and this area of creeping up, which we call wrongly around here at 95, indeed was above 100K. So we have to keep the mind open, because initially I thought that the resistance was 101, but indeed the resistance was 104. That played the role of what was in 2020 19.8. And after accepting mistakes and focusing also on the timing of the 15-16 of December was what made it play out. Notice that so far what we have done is landing at 106, which is what I mentioned as well in the video yesterday in Convuro Trading. I say that the first target for the first day is to be slightly below the first CPR line. There were some people complaining why I'm not using logarithmic scale. I don't need it. That you have to be a beginner for not using logarithmic scale? Not necessarily. We have CPR and it has a very good win rate. If it didn't work, I change it. If it's not broken, don't fix it. In the first day, the green candle made it to 21, roughly below the CPR level. Basically, the distance between the pivots was 3.3K and we went $600 less. In here, the first day was 4,000 less out of 16,000 moved. So it's not perfect, but the first candle managed to take out the higher high of 104, put in 105, and that allowed for the second candle to go to 106.7 roughly. Now we need to pay again attention to this to understand what could come next. Notice that in here, the second day, it just smashed the first resistance of the CPR. And although that could happen, that is also subject to other considerations. Notice that this pump was on a Wednesday. Today is a Monday. A CME has opened and there is a gap below the price. So we need to be flexible for that and see what could be the effect of that liquidity. And you can see it on the 4-hour time frame. After the breakout global, we have not just came back below the resistance, but also below the support of the yellow line. That means that this whole move on the 4-hour is a complete disaster, a fake out, and indeed is already breaking down. Why are we doing that? Well, if we pay attention, CME is opening and all of that, we might find some answers. Notice that the head and shoulder, the target is 108, and with these two breakdowns, it's very tempting to think that maybe that was it. Am I saying that that was it? I don't know. Let's continue looking at the charts. Daily. During these big moves, 4-hour can call out for that breakout. It will give us early indications that is about to happen. And in my opinion, we got that somewhere around 11 of December, and the fact that we continue putting highs on the 4-hour. With this breakout in here, it's a mixed bag. It's bullish, but it broke down, so it canceled out. We need now to take a step back from the 4-hour, look at the daily, and see what the daily is saying. The daily is saying 1. We broke above the resistance of 101.8. That was resistance 1, 2, 3, 4, 5 times. And that is if we count every time we touch it. But in here we got close and we also saw an order block selling out to the bottom of the range. So pretty much since 5th of December, 101.8 has been a big deal. Yesterday, we didn't only close above that, but we also took out the all-time high, 104.1. After that, today, we continue rallying, but as soon as CME open, we are seeing that imbalance that we left behind is causing some drama, right? Market open, CME was rallying all the way to 107.2, but then it thought, hey, wait a minute, we are leaving behind a gap. Aren't we going to do something about it? And this candle in here with a big wick says that. The engulfing red candle confirms it, and then after that 106 sees the rejection from the order block, and then it continues towards the gap. Right now we are observing the gap, which starts from below 103.6 and spans to 102.3. Given that we have retraced all the way to here, there is a high chance that we fill that gap. That means price going to 102 based on the premium price on CME, that probably in a traditional exchange, call it Binance spot, is going to be more or less 101k. But looking at the candles, it's going to be probably to test this area in here. Notice that I call it test because I never assume that the test will be successful. We're going to go to 101 with a likelihood of 80-90% chances. Are we going to break down and continue going lower? Difficult to tell. On the daily, we can place this line like this and start sniffing into what the daily is doing, which is at the moment testing support at 66. If we lose that 66 on a daily closing basis, let's say somewhere like this, it is like taking one bullet against the bullish case, but it's not the end of the day. What will be really devastating is if this RSI ends up closing somewhere like here, causing it to become a fake out, or even worse, breaking below this trend line that is now located at 60. So right where we are is the local support. 60 is kind of the last line in the sand to allow this breakout to still come as low as needed to close the CME gap. When we do that procedure, pay attention that we don't lose the last line in the sand and we start crashing from there. Ideally, I want to see the price closing where we are today and continuing with a new high. Notice that on the daily, we haven't been able to go beyond 69 on the RSI. Entering the 70 will confirm that we have still a pending move to the upside on the daily. I don't think we are going to get to the top of the range of 86 because we were already kind of there and we are right now. I'm expecting probably we're going to get to somewhere like 80 RSI daily, but not 86. I'm pretty much basing my forecast on what I see every time we go there, right? We sell out and we start putting lows and building a channel to the lower end. That is kind of what we do all the time when we reach these highs in the range of the daily RSI. And every time we do it at a lower number. First 89, 87, 87, and this time we did it to 84. So somewhere between 84 and 80, most likely just around here at 78. So I'm not gonna need anymore the yellow line. I'm just gonna use the 60, the 30, which is the bottom of the range on the daily. That is still including the CME gap below the price from before, which is located between 77 and 80K. But now I'm going to include the 78, which is what I call the next potential target on the daily. So the top of the range is 86, which I say is very low likely at 134K. The 78 is the most likely with 115K. Notice that these two numbers are moving targets. So the longer we take to get there, these targets are going to constantly move. So you cannot reference this 134K if one day we get there. What I'm trying to say today is not that it's impossible that we can cross 134K. I'm just saying that with this swing up, it's extremely low likely that we get to a price of 134K based on what the RSI is saying. We can get even to 150K at lower levels of RSI during bearish divergences stage. If you don't know anything I'm saying, you can watch the 3 episodes of my tutorial of RSI that will give you a lot more than you probably know by now about that indicator. You can find it if you go to my channel and just go to playlists and use this one, trading tutorials. It's got 8 tutorials for free. Just start with RSI, but then you get CPR, liquidation levels, and a lot more. Big Well Explorer continues to say that the big wells are accumulating. The breakdown is pretty much triple confirmed. I'll continue to monitor it. In yesterday's videos, I also covered the MACD, which I was saying it is likely that soon, if we continue on this move up, that we are going to see a bull cross on the MACD. Yesterday, it wasn't really evident, but with the price move last night and today, we're closer than ever to get a bull cross in here. Notice again that in March, we were also very close, at least 3 or 4 times to get that bull cross, but we only got it once we fully reset below the zero line on the MACD. In here, we could also dodge it and continue going down, but I think based on the seasonality, we should be seeing a bull cross coming up later. People that trade these bull crosses prefer to take them below the zero line for a full reset, less risk. This is something that, if confirmed, becomes a continuation signal, not an entry signal. Notice the difference. The big difference is at this point we're quite overextended in any time frame that you look at this. Therefore, the risk is huge to take an initial long from here, which I stated again yesterday. The time to buy was when we were talking about buying, and that even includes 95K and those prices from the most recent price action. But my largest holdings after I sold at 73.5 occur at 49, 51, 53 if I remember right, and maybe even 59. I'm starting to forget, but you can watch my old videos to find them. The TA we are doing now is for continuation. I'm still holding my longs, and I want to see if there's any hope that this goes way beyond, or if this is it. I'm not sleeping with a finger in the sell button, but more like with a big bag of popcorn and just watching the game at this point. And look at this. This is a party of liquidations, pretty much what we were expecting to happen if we get to this area. Day by day, we are looking at the liquidity pools, and if you've been watching the channel for long enough, you know that they serve as a guide, not necessarily as a guarantee. Short-term liquidity is all gone. Long-term liquidity is just leaving a slice of red at 107. There's still a lot to continue going higher, but now we need to deal with two issues: the retest, number one, number two, the CME gap, and the breakdown from the 4-hour. We need to assess what's going to be the actual impact of that before we can start thinking, yeah, sure, we're just gonna continue parabolic here because there's liquidity pools. If I say something like that, you should slap me because it's not clear at all. So here is another alpha that doesn't necessarily play every time. I'm gonna show you very quickly. On this area in here, you're gonna see this red that I'm highlighting every time that there is very little number of longs. These are longs and shorts accounts on Binance, and you can see in this peak there was when most of the longs will have closed their position, and that called for that top at 65.8k. Then we get this area in here again in the red, very little number of longs, and again this goes sideways with a small drawdown of 6% after that. In this area in here we get red again, and we get another sideways with a 9% drawdown. At this point in time again 7%, and this area that is in red, you're gonna see that the alpha didn't work. So we get 1, 2, 3, 4, 5 times, and one time it didn't work. 1 out of 5 in the recent price action, and right now we are in red. So far the drawdown from that 6% is 3%, so maybe another 3 to 4, maybe 6% will be even reasonable to go to the 101k and take out the CME gap. Do never trade any alpha by itself, because as you can see 1 out of 5 in the recent price action didn't work. So it could be the case that this continues rallying just like it did in 2020. 2020 says we should continue. We should break the resistance of 108 and go straight into 115. 2024 says, yes, let's try to do that. But aren't we forgetting something? There is a CME gap right below us. There are some fair value gaps as well, which we're gonna look just in a minute. And it's not big deal if we don't do it precisely like 2020 indeed. I think the biggest outcomes, we already got them. We got to 106.7, guys. Look at the order book. This selling wall that was at 100k, and if we focus on the next selling walls that we got now, they look like a joke really. Look at this one with 90 million, this one with 69 million is the next one at 110. The 310, which is no longer showing like that, but it was 310 million. Watch my older videos. Wasn't a big deal because it seems like they just pull out right on time. Let's go and see what we got next in the order book. The resistance at 105 was pulled out again and moved to 110, but this time it reduced from 91 to 69 only. Wells, larger pockets seems to be the ones responsible for pushing the price up. Large wells are just buying as a stare, whereas purple and green bought, but they sold kind of the top at 106. Still, the purple and the green are putting higher lows, so there could be continuation. Maybe they are just swinging it. And the delta in the past month hasn't been really helpful at all as an alpha. You can see that we reach this area where we say we don't take longs in here, and the price still push up. To be fair, at the moment that it pumped the most, the delta of long shorts went back down almost to the middle line. But we are gonna leave this one. I'll continue to monitor it. It's fantastic alpha, but at the moment it's not really calling out for anything meaningful. Largest liquidation below the price is at 99k. That is kind of calling for a larger retracement. If we just go to 101 and we feel the CME gap, we're gonna be very close from liquidating 99k. If we go to 99k, people are gonna freak out on the streets running in circles, as I usually say. If we go to that 99k, there are two ways to go in there: the disastrous way and the elegant way. The disastrous way is the price creeping down very slowly, punishing every long day by day for many days until we get to 99k. That is not what we are supposed to do at this time in the cycle, and it will make me feel a bit uncomfortable. If we just go today in a flash crash that recovers in less than 4 hours, pinching 99 and then going back above to maybe 101, 102, we can say that the intention of that move down was just to take down those longs so we can continue moving forward to the upside. And that will sound a lot more promising for longs. You can see with we have a fair value gap below 103.3 to 102.680, and 99 to 97.8 is overlapping with that liquidation level. So if we pinch that quickly and we take out the 99 liquidation level, we also take out the fair value gap and reduce the imbalances that become like debt, pulling us down when we want to be going in the opposite direction. Liquidity injections from China has increased, although I'm not sure if this candle is settled because the data refreshes once a week, but I don't remember which day the candle settles. If this settles like this, it means that we are still in continuation for adding more liquidity from China, which is always good to see. A new high, and the price will continue going higher as soon as we get a low, and then we are getting close for the sideways or even the bearish moves. Guys, on any of my videos, you're gonna find a button that is called join. I'm gonna use this specifically for TA, for people that want their coin to be analyzed with technical analysis. For the month of December, anyone, whichever you decide to join, is gonna grant you access to this type of posts that are going just for members, where you can write down which coins you want me to review. I also take requests from non-members, but members are going to get priority. Starting with January, probably the requirement is gonna increase depending on how many people there are, to either priority level or boss level. You can always go to the community tab in my YouTube channel and find a members only posts if you're one of the members, and then write down there your request. Whenever I do the next altcoin video, I will make my best to cover all the requests from you guys. The Fed meeting is this week on Wednesday, and the probabilities of ease have increased from 96 to 97%. Last time I read this, I think it was yesterday. It's always fluctuating. I'll let you know if there's any substantial change. And guys, if you want to trade with an excellent exchange covering most of the altcoins, not just on spot, but also with future perpetuals and leverage, consider Bybit. If you use the link in the description, you can claim up to 30,000 in rewards based on trading volume and also the lowest fees to trade. And I've got a new campaign with bluffing starting literally from today until just one day before Christmas. We're offering 10% cashback on your deposit. In order to participate, just use the link in the description, which also gives you the lowest fees to trade. This is one of my non-KYC exchanges. Not needing KYC means no hassles to open the account, not needing to use a VPN, having access to trading all coins using leverage anywhere you live. But I am aware that some people have reported that where they lived, they needed to use VPN. And for that, I have an alternative exchange as well. So my recommendation is that you give both a try to 2bit and bluffing. Starting with bluffing, just test it without depositing and see if it requires VPN where you live. It takes 1 minute to open an account because it doesn't need the KYC anyways. And if it works, stay with bluffing. If it doesn't, give a try to 2bit, which is a copycat, by the way, of Bybit. The UI looks really similar to me, and it has been built by people that used to work at Bybit. Offering 9K bonus and 40% fee discounts is also a great alternative to get access to everything without needing the KYC. Alright guys, I'll see you in the next one. Bye bye.